This is our Forex blog for February 28th, 2011. And like most days, we want to sit and look for the strongest currencies to buy against the weakest currencies. Here we start the day off with the dollar having real-time weakness. The daily, weekly, monthly trend is down on the dollar. The euro's monthly trend's up. The weekly trend has shifted down, but it's showing some real-time strength. CAD is showing some real-time, a little bit of real-time strength there, and again it won. And it has a very strong daily, weekly, and monthly trend. Same thing with the Swiss, and it had a lot of strength last night. And for most of the day, it was pulling back and having some real-time weakness. So you wouldn't want to trade this weak one against the weak dollar. You're better off finding currency that later in the day, like the Australian at 7, that had incredible strength, and the weekly and monthly trends all shifted up at that time. And also the yen later in the day was a little bit weaker, more consistently weak than the dollar. The monthly trend was down, the daily trend was down as of midnight. And the pound, which had a sell-off, also increased at end of last week, also had incredible strength today. It was one of the strongest ones. So you could have been buying the pound dollar or pound yen during that spike. And also, the euro, after about 4 o'clock, the weekly, monthly, and daily all are up, and it has real-time strength. So let's look at the euro dollar first. You can see this currency went from underneath to above its hourly moving average. It's also broke out above the previous month's high. And anytime you see a breakout over the high and it kind of goes sideways for half an hour to an hour and a half or two, when it breaks out, it's very likely to continue that trend. And sometimes it goes up without that much momentum, and so you exit that with 5 to 15 or 20 pip profit, pulls back, doesn't go back underneath the previous month's high, and so you might have went long again here, went up 10 pips, more than enough to move your stop to break even. And again, it pulled back and had a little mini double bottom there. When it broke out over those bars high, or on a tick chart, you might have got into this trade down here around 67, just absolutely took off. And you had the confirmation of extreme strength in our FX trend intensity. Fib level up here at and above the upper containment band is likely to be the end of the move, and the previous week's high was right there. Great profit target level, and usually when it's above the upper containment band, you don't want to be looking to buy up there. Anytime you see plus 20 strength, usually the first pullback's a profitable trade, and so you might have bought this little pullback here, and when it went back and kind of went sideways right here, double top with 1/5 the strength it had before. It's up too much. Good time to get out of that trade. And aggressive counter trend traders, once they see this trying to go higher in the trend reversal triangle, oftentimes it's the end of a move. You can see the strength was no longer there. And once it kind of ran out of steam up there, you might have done a quick little counter trend trade there and made 10 pips. Got short here in this pullback counter trend buy signal. The longer term trend is up, so you're out of your trade here around 90. Nice little 40 or 50 pip counter trend trade, and you had a small profitable trade here, maybe a break even or a 5 pip win, and this one was the biggest trade of the day. Again, also the pound had incredible strength. The monthly trend's up. The weekly trend was pretty weak due to the down move towards the end of the last week, but it was one of the strongest and consistently strongest ones today. Pound dollar would have been an amazing one to be trading as well. And especially when the price is above the hourly, you're looking for buys. You might have went long here when it broke out of this narrow range pattern, kind of went sideways and went up. Again, it was some of the highest momentum you've seen over the last, towards the end of Friday actually. But it went to the 20-day moving average upper containment band and came down. You get stopped out with a small profit on that trade. A lot of times when they hit the hourly and they don't really go much below it and come back up, you want to go long. And I would have probably got out of here with a small profit because of the intense weakness. And as it goes sideways and breaks out, this is another great place to get in. And as it's exploding up, you can see it's just taking off. You want to raise. You probably would get out of half your trade here, move your stop up underneath this sideways consolidation without much of a pullback. And usually it's not going to go beyond the fib targets up. So when it gets to these fib levels up here, you might be looking to exit the second half of the trade. And it's always very risky to buy way above the upper containment band. So I rarely ever do that. But you can see the pound dollar exploded up today. The pound yen would have as well because the yen was weak. And again, this is also above the hourly. Breaks out right here, you would have went long, hit the 200-day moving average, which is a major resistance area. It did have some of the highest momentum it's had since Friday. And then, when it pulled back and kind of went back up here and went sideways, this is where I would have got in it again. It did go sideways again here, and you don't know it's going to break out at the time, so you exit half your trade and you tighten your stop, and then it just takes off. And again, when it gets above the upper containment band, usually I get out when it kind of stalls at a resistance area. I would have been out right here. I would have missed the remaining move. This is just one of the intense, very strong trends. Another one that got really strong later today was the CAD. The dollar was weak all day. The CAD has a strong daily, weekly, monthly trend. It had a 4 or 5 hour of somewhat intense weakness. It kind of died off a little bit towards the end. And the dollar CAD was just kind of sitting right above its hourly moving average, which is oftentimes a great place to sell when it kind of went above its hourly. It went up without that much intensity. So selling a currency that's going up without that much intensity when the longer term trend is down is pretty much a no-brainer. You have the previous day's low right here. It's just kind of chopping around. Hit the previous day's low here, and the third time it broke through. And your profit target levels, since there's no support, normal support areas down there, is at or near the lower containment band. And this is a perfect example of why you got to be really careful selling at or below the lower band. If you went short right here, it only went down another 10 pips before coming back up. Usually you're better off waiting for some kind of a nice 15 to 30 or 40 pip pullback. When it runs out of steam, notice it went up without not much momentum at all. You look to go short, and you could have picked up 10 pips here and another 20 pips here as it fell off a cliff again. When it goes below the lower containment band, don't get greedy. If you're up 20 pips in the trade or only 5, and it's appears that it's not going your way anymore, get the hell out of the trade and take your profit. The Australian was another one that peaked. Not quite as high probability as the CAD because the monthly trend wasn't really that strong, but we had some real-time strength here at 7. Buying the Australian dollar makes sense at that point. You want to look for a sideways pullback or kind of a sideways consolidation or a pullback. At 7, this went back above the hourly. Usually that's a pretty decent trade when the longer term trend's up. So when it came down here before and went back above it, you go long. Same thing here. Now this time it only went up a few pips, and you would have lost 5 pips the second time, maybe made 12 the first. You got in on this one, and it came up to the fib level without extreme strength, and you're out of the trade here with about 20 pips. Not the most amazing trade in the world, but the Australian yen also would have been a pretty high probability trade after 7. You can see this one hit a fib level once, twice. The third time that it breaks through, it's very likely to go up. And it wasn't really an explosive move like the euro dollar and pound dollar, but it did go up 25 pips over a couple hours. And fib levels once hit 3 times. Usually when it busts through it, you're going to have some kind of a trend. This isn't an explosive trend, but it is a smooth, slowly going up trend nonetheless. Now the Swiss, extreme weakness today. The weekly and monthly trend, however, are strong, but it had shown incredible weakness. So you could have bought the Euro Swiss or the Pound Swiss today. Let's take a look at those charts to end our blog. Strong Euro, weak Swiss, and you can see what happens. Especially this is a good example of what happens oftentimes when it comes up to the hourly and is not able to go lower. When it breaks out right here, it's a very high probability trade, and this pretty much went up almost 100 pips. I would suspect the Pound Swiss would have been the same, if not more. Same exact pattern. Broke above the hourly, pulled back, wasn't able to go underneath it. Aggressive traders might have bought right here. And you can see it went up, made a higher high. This also made a higher peak, which means pound pairs are higher or getting stronger on this last wave up than before, and it just takes off. I would have probably exited half my trade here and just keep ratcheting up my stop on the second half. Weekly pivot level when it's way above the upper containment band is usually the end of the move. I would have got out of the trade here and not taken any more trades to the upside. But just using the currency meter, this found about a 100 pip move.